Can we talk about Sasol now? Is there anything else you want to
So
throw forward to?
that's a little bit more oil than gas, but actually 60% of the revenues or thereabouts come from chemicals within Sasol. Let's take a look.
It is an international integrated energy and oil company operating in 37 countries. Market cap here, 239 billion rand, a PE of 11.4, a dividend yield of 3.8%. Let's have a look at the share price graph, because this is such an interesting case study. I mean, Sasol was, and you look at it there, 2014, you couldn't buy enough of the stock. And every single portfolio manager, this is the blue chip of the future. And now look at where we are.
Well, I think a big driving factor of that is, of course, the weakness that we saw in the oil market. So I think in 2014, if I asked you if oil is going to go to $25 or $30, you would have told me I'm absolutely crazy.
To be fair, though, a lot of internal capital misallocation decisions as well. It's not all a result of the beleaguered oil price.
That's right. So we've seen the oil price coming under pressure, but we've also seen this big project that they took on. So a tremendous project.
Louisiana, we're talking about the Lake Louisiana project?
That's it, the ethane cracker project. So initially the cost estimates were $8.9 billion. And as you know, with a project this size, there's always cost creeping. And now the revised target is going to be about 11 billion. So it is a material risk, and of course they've had massive cost overruns in this project.
Which is actually unusual for Sasol, because they're pretty good. I think they had a lot of land acquisition permitting problems at the beginning, and the delays have pushed up the price. Also remember, the cracker basically takes natural gas and turns it into chemical products. And there was quite a lot of natural gas around in that Gulf of Mexico onshore US area. So it looked attractive, and I think still does look more or less attractive. The only problem, of course, is that the economy is a little bit soft, and the environment in which the decision was taken to proceed isn't the same environment as is now. Unfortunately, that's never the case.
Well, hindsight, as we often say, is the perfect science. But I also want to talk about the internal structures, and that being the dual CEO positioning. The only other company in South Africa in the top 40 that has a dual CEO position is, of course, Standard Bank. Your thoughts on the structure? It
doesn't bother me too much. Of course, we saw the former CEO, David Constable, stepping out. So to have this dual CEO role doesn't concern me too much. I mean, it is a complex organization across a wide geography, many countries, and also many different sectors.
So do you think most companies should have two CEOs, because there are a lot of complex companies out there?
No, not necessarily, but I do think such a complex company, I do think it can warrant a dual CEO.
Look, Bongani Nkwababa is the guy who's based here locally. He was the CFO of one of the big platinum companies, so he's an experienced CA, I think, background in terms of business and business leadership. Steve Cornell is an American and is a chemical scientist and an engineer. And he's based, as I understand it, mostly in Houston. So it's almost as though they've got, you know, two CEOs, but they're managing two different parts of the business.
Although, when I went to the announcement that they were taking on this dual CEO positioning, and correct me if I'm wrong, but they were jointly and severably liable for pretty much everything in the company.
I guess that's sort of technically how it has to be. So I don't know what the board was thinking.
I've got a hobby horse here. I think I should do an investigation into dual CEOs.
I would have preferred if Dave Constable had stayed on, but he was an American sent here. He obviously had run his contract period and wasn't keen to renew, and it is what it is. But look, come back to Sasol. It's a very profitable business, using its coal feedstock to make liquid fuels. That's the cash cow, the Secunda operations. And then all of the plethora of chemical stuff that they sell does well as well. I mean, they're technically a very sound operation.
So is this the buy of the century? Let's have a look at that share price graph again.
It's been kind of drifting sideways because there's execution risk. The debt is going to be high as a result of all of this project work.
The revised, what were you saying, 11 billion on the Lake Louisiana, or Lake Charles?
Lake Charles. And I think all of this is just adding to the uncertainty. So I think the market is really waiting to see how this project comes online in 2019. As we know, the oil price is moving around quite a bit. So just looking at that chart, there's a lot of volatility there. So I think it's a really nice trading opportunity at 360. But I think for the next 18 months, I'm happy to sit out.
You're sitting out. You're not hot right now?
Not hot right now.
Yep, I'm going to go not hot. I think, you know, we have to see how well some of the stuff they produce in that new product sells, and also how the demand markets work out here locally as well. Not hot for me.